The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 16th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial in. Right now is just fine, 877-927-6648. Of course, if you can't send me if you can't call in, you can always send me an email, steve@tfnn.com. Inside that subject line, just put radio show question. And, of course, inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 45 points, 22,916 is what she's trading at. S&P is up a point, trading out at 25.54. NASDAQ 100 up 9, trading at 61.01. Russell 2000 back 3 points, 14.99 is her print. The semis are up 3. The New York Stock Exchange down 3. NASDAQ Composite up 5 points. A very interesting chart pattern that is unfolding there. Wilshire 2000 back a couple. Trannies are the ones that gave the big sell signal on Friday, and they're continuing with that move to the downside. They're trading down 83 points as we speak right now. Volatility index gapped up, so to speak, this morning. In other words, opened above the open of Friday out there. That's a little bullish sign, a little bull separating line. That could mean, maybe it means that the spot volatility index is going to head to that 50-day exponential moving average out there. You've got price line. Oh, shoot. I'm going to have to reset this set of charts here. I can't tell you who's leading dollar-wise, the upside or to the downside. Just get back, just back in my chair, really, within about the past, it looks like 13 minutes now. Just coming back from El Dentist, always a great way to spend your morning. Actually, it's not a bad way considering what I dealt with last week. So let's go take a look at the charts out here. This is absolutely fresh look for me as I just simply started to get things going. One of the things that I was focused on, so this is kind of interesting here. Now, it is 1:09 in the afternoon, and I was taking a look at the market breadth inside the NASDAQ as well as the S&P 500. This is the market breadth from a 60-minute time frame, which if you just pay attention to the top portion of our screen out here, when you take a look, the green line is representing the number of issues in essence that are trading above the tops of their TAS market profile. In the red line, the number of issues that are trading below the bottom. I could put a blue line out here. Those are the number of issues that are trading in between. We'll leave the blue line off. In its simplest interpretation, when you see crosses, red above green, that tells you that there may be a short-term change in trend. That would be to the bear side. Green slides back above the red, short-term change in trend to the bullish side. Now, this is not going to, well, for the most part, it's really not it's a little bit of a lagging type indicator because it's never going to call the top ticker the bottom tick out here, the very top or the very bottom. But it is very helpful, especially while markets are up near their highs. So this would be the first signal that you could see if there was going to be any change in trend. Now, the number of issues trading above the top of the box 39, below 43 out there. So it's not like it's a huge margin, but it is a margin nonetheless. That's the NASDAQ 100, which is trading up 8 points right now. So that's got to make you say, something to think about. Now, this here, because it's a 1 hour chart, this can change over the course of the next 50 minutes for sure. But right now, as we speak, right now, I want to give you I'm telling you what I do when I sit down in my chair and try to get a feel for, okay, what is the market communicating to you and I out here? If we take a look at the S&P 500, we'll go ahead and put this chart up on the screen. Again, the same look out here. We're pretty much almost even Steven. You've got 183 issues above the top, 181 below. So a little bit of a neutral stance out here inside of the S&P 500. Now, what I don't have, I wish I did have it. I only have the NASDAQ 100, which is really the NASDAQ 109, something like that. I wish I really had this tool here for the entire NASDAQ composite. But then we'd have to take a look. We don't have that, so it doesn't really matter. We just simply don't have that. Now, why do I want to take a look at that and understand that? Because you got the NASDAQ composite basically at new all-time highs out here. Yeah, you're at a new, if you close right now, you'd be at a new all-time high. And the reason I want to take a look at it is because it, too, is giving us the largest signal of, hey, buyer beware out there. And that is, and that all depends on what you believe the NASDAQ composite represents from a market standpoint, whether it can be the one that is leading things the upside or to the downside out here. And the area of focus for my eye is the very bottom panel. That's the advanced decline oscillator reading. Again, take a look at all of the advanced decline issues, looking at the difference between the last 39 and 19 days out here from an exponential standpoint, because we don't do anything here that is simple. Hey, you want lousy results? Well, then do simple things out here. In this case, we can see it's well below zero. Minus 60 is the reading. We'll call that well below zero. And well below zero because it's extending its losses, meaning the market breadth. Look, I don't need the TAS market breadth tool. It would be nice to have it to be able to communicate directly to you unequivocally with conviction what this means. This means there are problems with inside the NASDAQ composite, even though we're not really at a new, we are right now at a new, if you closed right now, it'd still be a smidgen of a new all-time closing high out here. Now, the reason that, so I know that to be the case. And what I did just before we were coming on the air was just try to take this back as far as I can to see, are there times where this just simply, it just ignores Steve-O's readings? He's crazy. So don't pay attention to him. The mere fact that it's down below zero, it doesn't mean anything out here. And so I just simply start going back from right to left out here. And just to give you an example. Now, one of the easy ways for you to read whether that advanced decline oscillator is above zero or below zero is just take a look at the summation index. That's this, I just enlarged, if that's a word out there, that panel. That's panel number 2, because the way that my system here operates is that when the advanced decline oscillator is below zero, it turns red. Kind of a change in trend tool out here. We can see the change in trend has not exactly, the memo is not gotten to the price lords out here. Last time that we saw the NASDAQ composite get below that zero line, well, really took place on that 727 day. Not that we were flying a 727. And you can see we did get a nice little correction. We saw that divergence here at the bottom. That was back on the trading session of August 21st. So let's spend a little time taking a ride on the reading. Let's go see if we can figure out the readings of the message of the NASDAQ Advanced Decline Oscillator. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if you're just joining us, we're taking a look at the advanced decline oscillator reading. That is at the very bottom of my panel for the NASDAQ composite. I wish that I had this for all indices / ETFs out there. At one time I did. That was because there was an individual who I'm sure paid a fortune to gather all that data. He did it every evening. A great guy out there, but unfortunately health, I believe, got the better of him. But it was really cool because, all the work that I had to do was manual, so it was a big spreadsheet experience out there. But since I'm kind of a bean counter, the spreadsheets were just fine. But so I only really have it for the New York Stock Exchange and the NASDAQ composite, which is a real bummer because it's always cool to have it, for example, the GDX doesn't have that many issues in it, 30 maybe or something like that. But for something with a large number of issues, it's really kind of a cool tool out here. So the point that I was making with regard to the NASDAQ composite is, we've continued when I say continued, I'm talking about just really for the last now 3 days out here, where we've seen prices inch higher, albeit with small-bodied candles. But the advanced decline oscillator, again, the difference between 19 and 39-day exponential moving average of the advanced decline data out here is below a zero threshold level. On my screen, it's a horizontal green line, the very bottom panel of my screen out here. And when you get below zero, the panel just above that, you'll see a red and green line. It turns red. Just to simply let you know that there's, in essence, we'll just simply call it a market breadth type issue. And when you have price moving higher and you have the advanced declines moving lower from upper left to lower right, for example, you get a divergence. Now, as an example, here's a divergence coming back into the time period of February 15th, 2017, down to, really when it broke below zero was around February February 24th out here. So we saw prices continue moving higher. Now, what that led to with regard to a decline wasn't really much of a decline. It was more so a horizontal or consolidation. So that's a little bit of a signal for you. There's really two outcomes when this pattern occurs out here. And that is that, well, first, there's one outcome you don't get, which is just simply continuing to move to higher highs out here. So you get a market that consolidates, pulls back a bit, sideways-ish type move, or you actually get some type of decline. Is what do I typically see more of? I typically see more of a decline than I do sideways moves, but you never know which one is going to unfold out here. And just like it helps you at tops, it helps you at bottoms. Last time we saw one of these bottom tool indicators was between the August 10th, 2017 time frame and August 21st. We saw price moving lower. We saw the advanced decline oscillator reading making higher lows out here, and that's what you want to see when bottoms form, just like at tops out here. Now, I took this back a ways and just was really focusing on, hey, so what really can I find some examples? What do you mean experiences, Steve? Examples that show just the opposite. That it doesn't really matter out here. And I really can't. I went back to about 2013. This is a tool that many of you have on your own charting packages. So my suggestion is, hey, go do the work yourself, because maybe you'll see something that my eyes during the radio show or what have you, aren't going to see out here. But at this stage, this is suggesting to you and I that there are problems here inside of the NASDAQ composite. Now, you and I don't trade that, right? We don't trade that, so it's not going to necessarily help us, but it is helpful. So I believe we got a caller on the line, and that would be John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. Glad to hear you are on the mend, and thanks for taking the call.
My pleasure, and thank you. So I know that you want to take a look at, what's going on with my system? Oh, I put in the wrong symbol. You want to take a look at Google, which I believe you are actively trading out here. So tell us what you're doing and how I can help.
Yeah, just for full disclosure, I had bought this 2 weeks ago, 965-ish. I'm already out.
Okay.
I got out a little bit too early, but I'm asking about the GOOGL
Got it.
security. That is Google with voting rights.
Perfect.
The reason I'm calling about that right here, right now, is I was looking with interest on your top-down overview of the NASDAQ composite. Of course, Google is a massively large company within that. And I'm looking at the pattern here, potentially creating a double or triple top, potentially a failure. Can you shed some light as to whether any of your work suggests that is likely or not?
Well, so we're in that, and folks, what John is talking about, if you take a look at the GOOGL, and, he nailed it here with regard to seeing the price of this equity get back up to a previous swing point, a previous high. The first one is the week that began June 5th, 2017. There were 9.6 million shares to the upside. The next time was 17 million shares to the upside. That was on the week that began July 24th. And then last week, which only had 7 million shares. So volume-wise, you went from 9.6 to a total of 17.6 to last week 7.1. So pretty good indication. It doesn't have the volume to really try to bust through resistance. Now, if we take a look at those candlesticks on each of those weekly sessions, June 5th, July 24th, those were bearish reversal candles. So that tells you that there's resistance. We also happen to have our TAS weekly profile out here, which also, John, has resistance at the level of 1,861. So right now, the information would support that it's not going to go ahead and bust out the highs. It's struggling to do that. So that then says, where could things pull back to? This is the weekly chart. The weekly says if there is to be this pullback and it's just in a consolidation, then you would be looking at a price move perhaps down to the 924.82 level, which has been a great level of support out there. And then we do the same kind of thing, which is look at volume if price were to get down there. The structure of this box, this weekly box, is bullish because the center is closer to the bottom than to the top. That then says that 958.34 could in fact be a support level out here. It doesn't tell us, I don't see any other pattern other than what you and I just looked at as to whether or not it's going to be a fruition with the move back there. I would switch back to my daily time frame chart and say if price gets back to 993.10, it's just recharging. That's my little red line out here. And if price gets to there and holds, then it's just in a real high level, upper level consolidation. If it gets below, closes below 993, then I think you're looking at the 958 to 924 level. So that's what I see as I take a look at it. And it's really the weekly combined with the daily that's providing you and I with the best information at the moment.
Yeah, I appreciate that very much. And, of course, within the next 2 weeks, Google reports earnings, and this stock is notorious for gapping either up or down in response to an earnings report. So we'll have that to deal with, of course.
Yeah. Now the one other area to price point and potentially watch is 981.21. The daily profile out here, John, is it created a new profile below price, which is also a bullish message out here. So that's all I've got for you.
Thanks so much, Steve.
You bet. Thanks for calling. Stay tuned, folks. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's get to a couple questions that have come in. The first was by email. There was a couple inside the den. By email, it was from Phil looking for some targets or information on YY. YY happens to be the name of the symbol as well, the name of the stock as well as the symbol. And I'm in from the low 80s and added in the low 90s looking for where. So here's, if we take a look at YY, and John and Philly and I were taking a look at Google. And what we were noticing was that, in essence, that it was making, it had made its way back into the prior swing point, which can be an area of resistance out here. Now, in the case of YY specifically, this is the monthly chart we're looking at. September 1st, 2014 was also a bearish candlestick. Now, that's as the month is not over. We're halfway through the month out here. So, Phil, what you're looking for is really a change in polarity. By getting back to that level, by the way, is 96.39. You're trading 97.22. Unfortunately, October 16th doesn't really matter. Volume there was 38 million. You're only at 14 million shares, so it looks like you're coming in with lighter volume. May or may not matter out here, but let's just take it for what it's worth right now. You really want to see this close above by the end of the month, because you asked about long term. You want to see this close above 96.39, because if it doesn't have the energy to get up there, that was a previous level of resistance. Well, then that says, okay, I don't have the same like we looked at inside of Google. Can't take it out, can't bust it up. Now wants to try to bust them down. Now, in the case of YY, bust it down, what does that mean out here? If I take a look at a weekly time frame chart, well, let me do this. Let me put YY on my other system as well. Let me change. Well, that's interesting. Of course, you're saying, what do you mean that's interesting? What's interesting here, this is just the daily time frame, so I'm going to switch courses a bit. And this hasn't updated just yet. You're at 97.13. Mine show 95.10. It'll eventually get up. Here's what we know. This is moving higher on a daily basis, moving higher with less relative energy. That's why I've got that black diagonal line. There we go. Now it's up to the price point of the day. You're in wave number 6, potentially wave number 6 out here. It could be a wave, which in my system is going to be labeled as F. You're wave number 6 or wave number 2 to the upside. You'd like to see this on a daily basis stay above the 92.25 level out here. So you got a daily time frame, which is not what you asked for. Things are stretched with less energy, and on the weekly, you're heading into a swing point with light volume out here. You're getting long term. What I would really hone in on and focus on would be 96.39. If you do close above that, then that should be, the saying is that old resistance should become new support out here. If it doesn't act as new support, then what you had was a false breakout to the upside. So, Phil, thanks for writing in. Best of luck with that trade out there. That was YY, or even ticker symbol YY. Now, we had a request to take a look at the SMHs out here. If we go take a look at those utilizing the 3 time frame, that's going to be the ETF for the semiconductors. And the question was, can you take a look at the SMHs? Curious if your oscillator is showing us. Oh, okay, that's right. So here is what it is, what it be that we know about the SMHs out here. Just to take a look at the ETF. Of course, this is going to take a moment to properly load. I think it is. Let's see, 97.58. No, we're right there up to snuff. So as we take a look at this, the SMHs, the ETF, this was for Dano. There's no other way for you and I to call this other than strong. And you happen to be in the 7th wave. That's from the low of July 4th out here. So you are in potentially wave number 7. That's letter G on my system. If it's not 7, Then what I would do is I would be recycling from about right here, your wave number 3. As long as the SMHs stay above 96.59, that is Stevie's red line out here, no problem. And we'll just simply continue to move higher. That would be your first potential level of failure on a daily chart. And we'd really want to be using Stevie's red line versus the TAS market profiles, because if you were to wait for price to get to the TAS market profiles for a failure, well, that's all the way down at $90.99. That's not going to do you a whole heck of a lot of good out here. Now, in the case of the SMHs, you're up at new all-time highs. And what you'll notice here, small-bodied little spinning top-ish high wave candle. The actual explanation for that, or the emotion that it is sending, is confused. Well, it's not confused today on a daily chart because price is trading above that session out here. But nonetheless, we've seen basically small-bodied candles suggesting the market is tired out here. Is it giving us some type of major topping pattern out here? Well, what I could say, Dano, is, when you get to that 7th wave, there's always that possibility. That's where you can see the largest changes in trend out here. First level that you've got to pay attention to is going to be 96.59. I hope that helps you with that trade. Cam wanted to take a look at the IWM. If we put the IWM up on this chart here as well, what you're going to notice here, Cam, we take a look at the IWM, is that today's high, pretty much exact high, ran right into Stevie's red line. Right, and we've seen this for the past 4 trading sessions out here. Today, though, was the more important reading because price got up there, bang, that was it. Now, this just simply confirms for us how important Stevie's red line is. Kind of cool, isn't it? And cool from the standpoint that is real resistance. Now, from an IWM perspective, you'll notice at the top of its TAS profile is 148.53. The question becomes, when I take a look at the indices, cash indices, or the ETFs, how are these profiles on those versus the futures contracts? And I'll tell you that I just think that you pay attention to the equity futures contracts. They seem to me, specifically because of all the charts that I've done, that have more meaning. Nonetheless, here you had a TD combo 13 right up here at this little hanging Chad, so to speak. That was from October the 4th. So you'll see a number 13. The very next session was a TD9 setup. Both of those can be topping signals. We can see a couple different bearish candlesticks up here. So we know up at these highs, that's resistance. Now, the cool thing there is I can't control where price is going to go, but we do know if you take out resistance, that would be a bullish message. At this stage, we have to know, you don't have to know anything, but here's what I know, here's what you know, this is very significant resistance areas. So this says, hey, not until you get into 148.53 is there a problem, and then price might get to the 146.46 level. If I look at the daily, that was the daily chart for IWM, if I look at the daily chart for the Russell 2000, you're going to see different sets of profiles out here. And this, you can see where price stopped right at that Stevie red line tick. And this says, hey, you know what? Price is headed back to the 1487 to 1480 level. I believe, Cam, that is really the message out here for the Russell 2000, albeit with the equity futures contract. Just simply pulling back, giving you the next chance for a buying opportunity into these markets. Remember, longer term, these markets are headed higher. They're not just headed higher, they're headed higher. There's a little difference there in the conviction behind that. Folks, we are definitely in the favorable seasonal cycle. Don't let anybody tell you anything different, because if they do, they're lying. These markets are going to be moving higher, but first, perhaps a bit lower. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now, during the first segment of the show, I think it was first segment, I mentioned the Dow Jones transports out here. Let's put this chart on our screen. So really a beautiful chart with regard to a lot of the different patterns that you and I love to take a look at. For example, the Gartley buy pattern. Gartley buy or Gartley sell. In this case here was a Gartley buy pattern, which consists of an A to B equals CD to the downside when there was a nice move to the upside that was missed. And in this case here, and you'll see it shaded in green. This was about a 0.786, slightly less than a 0.786 Gartley buy pattern. And you and I wait for the cavalry, in this case here was the bullish cavalry, to arrive. And the bullish cavalry arove? Where are you getting that kind of grammar from, Steve-O? But they did arrive on August the 25th, and they can't hide. They gave us that signal at the completion of that pattern. And then was the move to the upside. Now, every Gartley pattern has 5 different outcomes. The ultimate is outcome number 5, which turns out to be the A to B equals CD to the upside, which is really great because when you see these patterns and you get into a trade, you're really the only thing you can do is to identify the reward risk ratio and then determine whether or not it's worth putting your money at risk out there. And in this case here, and so you're always looking for outcomes number 1, 2, 3, 4, and 5. Outcome number 5, the ultimate outcome being the A to B equals CD pattern off of the original start point for that Gartley, which was back on May the 18th out here. And that's what gave us our projection of 10.029. Now, price got slightly above 10.029. Closed just slightly above it on October 12th. And then on Friday, we saw price go ahead and gap up slightly, move a bit higher intra-session, and sell off throughout the day, creating a key reversal, a bearish engulfing, creating another beautiful pattern, price moving higher, doing less relative energy out there. Now we've had price moving to the downside. Now, what I didn't want anybody to do out there was to back up their trucks because I said this gave us the best sell signal. As I featured in the newsletter this morning, before I started heading out to the old dentist office out here, was, hey, if you were in that trade, because I know a couple people got in it on Friday, or you were going to entertain getting in that trade, you needed to watch the bottom of the TAS profile out here. Now, I know I just said, hey, when it comes to the ETFs for the indices out here, my preference is to rely upon the futures contract. That is still true. It doesn't mean that we ignore what shows up in the ETFs out here, and you take what you can get. In this case here, we could get that there could be support at the bottom of its TAS profile out here. That profile, that's the left-hand panel. Let's go ahead and explode it up, so to speak. More neutral than it is bullish structured or bearish structured out here. Now, the level was 176.71. We said that's where price ought to be able to find support. That way you could do your own reward to risk to determine whether or not to get in on a trade out here. The actual low today, 176.67. Versus the 176.71. So it's possible that's the extent of the move. Maybe if the market is actually topping, well, if it is, or at least the transports, if they are going to have a further pullback, it's going to have to bust through that level. Volume-wise today, you're at 74,000 shares in the IYT. The last time we were down was with 109,000 shares, so probably roughly the same kind of volume, give or take out here. It's not like it's exploding to the downside out here. But nonetheless, that was the best topping signal that we have seen inside of the market as we speak at this moment. Okay, I don't see any other requests and nothing by email out here. And hey, we still have a couple of segments left in the show. So if you do have a request, just go ahead, send me an email, steve@tfnn.com. Give us a call, 877-927-6648. Of course, just go ahead and type it inside the den, and I'll be happy to get to it. You've got gold trading down 3 buckaroonies out here. How could that be? That is blasphemy out here. I mean, as far as I know, you've got the yen futures moving higher. Let's go take a look at both of those. Let's look at December yen futures, see if there's any problems out here. And the answer is no, actually they're pulling back just a tad. Is that right? Is that right? Is that right? I guess it is right out here. If we take a look, so if yen futures are pulling back just that's the weekly chart. Let me put up the daily chart out here. Well, there you go on the daily. So now, no real problems out here. We take a look at yen futures. No problems per se. Per se would be 0.8911. Not unusual for it to be pulling back a bit. And I really noted this in the newsletter this morning because if we take a look at the gold contract, that was one that was giving the resounding news that said, hey, hold on a minute here. Things are going to be slowing down or should be slowing down. That's because of that bottom price oscillator reading. Different than the advanced decline. This is the price oscillator reading out here, and you'll see it reads out at minus 1.24. And when we get up to that zero level, what we typically see, now this is actually potentially this is what you want to see take place. As that price oscillator gets to the zero line, what you actually like to see is you like to see price pulling back to Stevie's red line. Because you want to see a bullish test. A bullish test is a test and a rejection. It is like a trampoline out here. So, and today is going to be, or should be, looks like it will be, unless it falls apart, a TD6 count. So number 6, the setup, TD6 count out of potentially 9 out here. I still see us getting to that level. And whether we do or we don't doesn't really matter. The pattern that is most important to you and I as we speak right now is a test of that red line. If price pulls back at any point in time, closes below, it's a daily chart we're looking at. Right now, the number is 1293.50. That number is going to change a bit, but let's just use the numbers that we have right now today. If it closes below Stevie's red line, you will then have a falling price oscillator below zero. And that will be trouble. That won't just be trouble. That'll be double trouble out here. At this stage, even though one might not like to see pullbacks, this is really the best possibility, is that we see this little stalling of price. We wait for the two Mark Twains, to meet, and then go ahead and give us a signal. Do you test and reject, or you just simply slice on through? And that way we'll have a clear indication with conviction inside the market as to what it wants to do. So gold, 1293.50 would be the number. If we go take a look at some shorter term charts, well, if we're going to do that, Steve-O's got to change his worksheets out here. Let's go to this one. And let's just take a look at what's going on a short-term basis. Here is a 30-minute time frame chart. See what it is that we see out here. And I don't see anything. We're getting down towards the zero level. Price ought to stabilize here over the next couple of hours as well. Maybe we see price bounce up and test Stevie's red line as well. Right now, that's at 1306. We need more time on this one. You're coming into that wide-ranging bar out here from 9 o'clock in the morning. I think that was on Friday. So you've got an A to B equals CD to the downside. That looks like this on a short-term basis. You're already at the 1 to 1.618. 30-minute chart, you're looking for some type of bullish reversal signal to give you a short-term Gartley buy. Steve Rhodes with TFNN. Dow's up 59, S&P's up 3. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Brooke writes in and asks if we would take a look at Apple. So let's go do that in order to go ahead and close out the show. AAPL is the ticker symbol. Not indicated what time frame it is, Brooke, that you're trading long, short. So let's give you everything that we can out here. Let's start with the daily time frame. And see what it's doing. Trading out at 159.45, 16 million shares behind the move right now. Now, Apple is going to be giving us, just like we were talking about, you and I were taking a look at gold here, and how its price oscillator was getting towards zero. You can see that in the case of Apple, it is the same out here, minus 0.0768. So it's really close to the zero line. You can see prices gravitated well away from the Stevie's red line, 156.11. Brooke, what I would zoom out here and taking a look at this is over the course of the next few days, price and my red line ought to catch up with each other to provide you with the most important daily information as to what Apple is intending on doing. Is Apple intending on getting back in the 164 area, getting back up to its swing point, or is this really just a counter trend rally in what could be an A to B equals CD to the downside? We'll know the answer to that when we see the test of price and my little red line. Sometimes it's not so little out here, and it is worth paying attention to. In the meantime, until that happens, what is Apple doing on a daily basis? Let's just go take a look at some volume metrics out here. The kind of like a B point of an A to B equals CD, so that's going to be our little swing point, was the trading day of 9/12. 71 million shares. You're moving into it with 16 million shares out here. So these folks are just glad to get their money back, potentially. Because they weren't so happy about that trade when price got down to 149.99. You're $10 higher right now. Maybe it didn't matter to them. But that's what it looks like Apple is doing, Brooke. I hear the music in my ears. That means, because I love that music, your friend and mine, your favorite polar bear and mine, David White, he's up next. Have a great day, folks. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.